Becoming a successful investor can be a daunting task without the ability to predict market trends. This is why Ray Dalio, a seasoned global macro investor with over 50 years of experience, delved into 500 years of economic history to shed light on historical patterns and how they are reflected on today's market and economy. In this video, hopefully you will get a deeper understanding of the economy to better anticipate and navigate future challenges. By understanding historical patterns, you can gain insights to navigate future challenges more effectively. Throughout his long international investment career, Dalio observed that people are often taken aback by so-called unprecedented events. Dalio's research spans 5 centuries, and he uncovered trends triggered by economic upheavals, social transformations, and international conflicts. Published in 2021, his book, Principles for Dealing with the Changing World Order, has shaped his concerns and influenced his investment strategies. In a captivating interview on Davos's Meet the Leader podcast during the 2022 World Economic Forum annual meeting, Dalio emphasized how leaders can benefit from understanding the past to navigate the current challenging period and anticipate future issues. Ray made several striking discoveries during his research, uncovering recurring patterns throughout history that were previously unfamiliar to him. These noteworthy findings include the current phenomenon of debt monetization, which has far-reaching implications, including its impact on inflation and various other aspects. The significant level of internal conflicts arising from extreme wealth and value disparities, resulting in clashes between leftist populism and rightist populism. This struggle holds substantial consequences. The existence of multifaceted struggles involving various forces, for example the Russian-Ukrainian conflict and the involvement of NATO, as well as the rise of China as a major global power alongside the relative decline of the United States. Various types of conflicts are bound to arise due to the absence of a global court or justice system to address issues. One notable form of conflict is the competition among great powers, which lacks a mechanism for imposing global sanctions. Sanctions, which typically involve economic battles, can have significant implications during specific periods. To illustrate, let's consider a historical precedent when the United States froze Japanese financial assets and imposed economic sanctions, thereby restricting oil imports. Now, let's imagine a hypothetical scenario where China faces similar sanctions. Given that China accounts for 22% of imported manufactured goods in the United States, including popular brands like Apple and Nike, we can assume that the impact would be huge. Inflation and shortages would likely ensue, resulting in significant changes. At present, we are undergoing a transition toward a climate where there is a heightened allocation of ideological or political resources. Such restrictions have a notable adverse impact on economic efficiency, often leading to an increase in inflation. It is through the interplay of these 3 components, resource allocation, economic efficiency, and inflation, that the functioning of the system becomes logically explicable. To really understand this intricate economic mechanism, some knowledge of historical patterns really comes in handy. With Ray's research spanning 500 years of history, we wonder if there was a specific statistic or truth that caught him off guard. Yes, there were specific aspects that captured Ray's attention during his research. For example, the emergence of a new world order resulting from conflicts between opposing parties. This struggle establishes a fresh domestic and global order, with one side eventually prevailing and gaining power. Once in control, the victorious side realizes the transformative effect of war, serving as a great equalizer, and takes steps to eliminate debts. This transition marks the beginning of a period of peace, often accompanied by prosperity and wealth. This cyclic pattern shows a consistent trend of rising living standards and wealth, wherein the dominant power becomes unchallenged and the desire for further conflicts diminishes. This phenomenon can be observed throughout history, such as during the Industrial Revolution or the post-World War II era, and continues to shape our understanding of socioeconomic dynamics. There are also always improvements in living conditions. However, due to the inequitable distribution of wealth, it usually exacerbates wealth inequalities and the accumulation of debt. As these economic disparities widen, they give rise to distinct opportunities. For example, individuals with greater financial resources often wield more power and can provide better support to their offspring. Consequently, three recurring outcomes become evident. Socioeconomic disparities. The wealth gap between different segments of society widens, creating a significant divide in opportunities and resources. Concentration of power. The accumulation of wealth by a select few grants them greater influence and control over societal and economic affairs. Intergenerational advantage. The advantages gained by affluent individuals translate into better prospects for their descendants, perpetuating the cycle of inequality. These three outcomes consistently emerge as consequences of the uneven distribution of wealth and influence in society. Ray also discusses the impact of war and government inefficiencies. Over the coming years, it is highly likely that we will witness heightened levels of inflation and inefficiency. These effects may become evident through increased supply chain issues that persist in the subsequent years. Additionally, if capital restrictions are implemented, individuals may encounter limitations on transferring money outside their own country, whether it be the United States or another nation. These developments could potentially reshape various aspects of our lives, influencing economic dynamics, international transactions, and overall global interconnectedness. Our society has been built on the premise of free movement of capital, products, and services, ensuring a flow of resources and equal opportunities. However, in a world without such freedoms, resource allocation would be influenced by restricted monetary flows. It is crucial to remain vigilant regarding the potential for military actions. For instance, the situation in Ukraine is currently experiencing escalations, and there is a possibility of various forms of military aggression, including nuclear or other means. In the upcoming months, we can expect to gain further insights and understanding of these developments. It is important to closely monitor these events as they unfold. In the upcoming months, there are three key aspects that we will learn and observe closely. Firstly, we will gauge the effectiveness of punishments, particularly in the form of sanctions, which currently serve as a distinct American strength. As the United States no longer holds the same level of military dominance, it will be interesting to see if sanctions can achieve the desired outcome of deterring or impeding Russia's advances. This will likely influence the behavior and actions of other nations. Secondly, we will witness the alignment of various nations. Traditionally, we see the formation of alliances and partnerships characterized by axis and allied powers based on their joining motives. We are already witnessing initial signs of these alignments, and in the coming months, we will observe the extent of pressure exerted by the United States on other nations to choose sides. Finally, as investors, we can take specific actions to navigate this dynamic world successfully, leveraging historical patterns and lessons. One key strategy recommended by Ray Dalio is to diversify our portfolios by mixing uncorrelated assets. By investing in 15 or more investments that are not strongly correlated, we can effectively reduce risk. Emphasizing diversity in our investment approach is a strong recommendation to maximize returns and mitigate potential downsides in this ever-changing landscape. As a dedicated subscriber to my channel with notifications enabled, I am pleased to share the top stocks that Ray Dalio recommends holding on to. These stocks are backed by his expertise and analysis. Cisco Corporation, Starbucks Corporation, the Coca-Cola Company, HCA Healthcare Stock iShares Core S, and P500 ETF Procter & Gamble Company iShares Core, MSCI Emerging Markets, ETF Johnson & Johnson PepsiCo Incorporated Vanguard, FTSE Emerging Markets, ETF Walmart Incorporated. These stocks have the potential to deliver long-term growth and stability, aligning with Ray Dalio's approach and providing opportunities for financial prosperity. Ray Dalio stands out as more than just another billionaire offering opinions on the stock market and economy. As the co-CIO of the world's largest hedge fund, he demonstrates his expertise through actions rather than mere words. According to Dalio, becoming a wiser and more capable investor means having a well-diversified portfolio and being aware of your guiding beliefs. He refers to this as a set of guidelines or a recipe for decision-making, which can help navigate challenging economic conditions and contribute to achieving financial and personal objectives. According to Dalio, none of this knowledge is entirely new. The economy, much like other facets of life, experiences cyclical patterns. By recognizing and understanding these economic cycles, we can equip ourselves to better navigate through them. It is akin to a doctor who repeatedly encounters similar cases and becomes more adept at understanding and treating them. In my next video, I will discuss how we can gain financial self-awareness and break free from any limitations we may have imposed on ourselves. This self-discovery journey will enable you to become a more successful investor by overcoming obstacles and unlocking your true potential.